want to start out with this morning, we see, as I filmed this on Wednesday morning, May 18th, 2018, 3 weeks ago I gave the buy signal right here on this show when silver was sitting at 1624. We now see it at 1710, up over 6%. And we've seen the gold-silver ratio that peaked out at 81 to 1, now down to 79 to 1. We're starting to see silver in a catch-up mode. And we think this will continue because even though there's been lack of fiscal buying in silver, we've seen numbers out of the U.S. Mint where we're only on track to do 13 or 14 million silver eagles out of the U.S. Mint, where only 3 years ago they were doing 33, 34, 35 million ounces. But this is a different ball game. We've seen the big buyers buying fiscal are not buying silver eagles. So people that are trying to tell you to get out of silver because sales are going down, it's deception. The price is going to be affected either way. But if large buyers are buying 100 ounce and 1,000 ounce COMEX bars, then that's not reported in the U.S. Mint's numbers. So it's very distracting. But for the ones of you that track the ratios, right now it's 79 to 1. As gold sits at $13.50 and silver sits at $17.10 after this incredible run of the last 3 weeks that we think is just the beginning, getting started. We've also seen a technical breakout this morning in gold, and it's taken it above 1346 to 1352. It's in a no man land. We would like to see it close above 1356, but I do think without question the second quarter that started April the 1st is going to be a very significant quarter in gold and probably silver also. But the things I'm talking about in gold, there's something that happens and our phone lights up and people that haven't been around get distracted, but I get happy. And that's when people call and say, should I sell my gold because I see the long positions by the big boys has been cut way down. It's not the big boys, it's the big boys. When they start cutting their future contracts down and decreasing their long positions is when I, as an old veteran in this, say it's time to buy, because what they're doing is saying to you, it's time to buy, but I want to buy cheaper, so I'm going to take my long positions out now, sell them, and then I'm going to buy back because the technicals are incredible for gold. Even Jim Rogers, the Singapore famous investor, said this morning, the numbers that gold are going to in the next couple of years are going to stagger your imagination. And certainly we have been talking about this and we're a lot closer to it. Yes, we probably saw a lot of fiscal buying today already, not through my company, but in the market, because the big boys have succeeded in the few days past to bring their long positions down and get people to buy out, sell out, because they want to buy gold and silver cheaper to take physical possession. So yes, we're in a bull market. Second quarter is going to be great. The dollar is going to keep going down, and we're going to keep having the Fed trying to sell off debt on their balance sheet. We're going to have interest rates going up, which is good for gold, as I taught you a few weeks ago. If you look at the federal funds rate, when the interest rates are going up, gold's going up, and bonds are going down for sure. Stocks could go either way, so I'm really not here to comment on stocks, except stocks should always be part of your portfolio. I have no doubt about that, and that's what I do in my own portfolio. But now, beside my stocks and my metals, you've got to look at things that do well in rising interest rate environments. And we're watching these ratios, and certainly the dollar going down, other currencies are becoming a lot more attractive. For the ones of you that I'll see next month at the Follow the Money Summit, looking forward to meeting you and reacquainting old acquaintances that I've known over the many years in this business. And I will have as we reported last week in the interview I did with Jerry, we will be talking about some out-of-country purchasing that will be available to you that's never been brought or never heard on these grounds by me, or I've never seen. I'm not going to say it's impossible, but hopefully. And then for the ones of you that have stuff stored other places, and you're paying over 25 basis points a year, you need to call us and talk to us about how you can cut your storage fees and still be in a COMEX warehouse, because we are the only people that can do it. You can reach us at 800-247-2812. That's 800-247-2812. And when you call and ask for a special deal, we've got a couple because of all the wholesalers we're acquainted with, that when they get overstocked in their inventory because they're market makers, they call us to try to help them sell stuff off quickly. And these things are 2-3% below normal. And that's unheard of when we're only marking stuff up 2.5 to 3%, depending on what it is. And we can cover all that for you where you're buying it strictly wholesale. I really don't know anybody else that's doing this in the industry. So once again, give Dan or Kathleen a call at 800-247-2812. With this week's Precious Metal Market Update, this is Tom Cloud signing out.